What is going on, everybody? This your boy Vlad coming with video number 3. This is for beginners. So, if you're on video number 3, I'm assuming that you're gonna go with the strategy that I use and that you probably did your homework already. So, I'm gonna explain my strategy a little bit more in depth, so that way you could understand the ins and out of it, what makes this ticker move, how could you identify it yourself, and so on and so on. So very important that I think whenever you're starting off trading that you need to stick to a few setups. There's so many different strategies in the stock market, especially in penny stocks as well. Some people prefer buying breakout. Some people buy contract winners. Some people buy earnings. Some people buy biotech news. So all these factors could really make a stock move. So news is fuel to a stock. So the number one news play that I like would be earnings. Earnings is whenever a company announces that that they're beating expectation from analysts, and by them beating the analyst expectation, it tends to cause the stock to go up. Now, what do you classify an earnings winner? Just because they announce good earnings does not make it an earnings winner. So what I classify an earnings winner would be, it announced good earnings, one, and the stock moves. Those are the two things. Because sometimes you'll see a company announce good earnings and the stock is only up, 10 cents a share for the day, or it announced good earnings and the stock drop. Another thing about when it comes to earnings, you don't anticipate earnings. You don't try to anticipate whether or not if this company is going to have good earnings, because you will set yourself up for failure. So countless time I see people put like in chat rooms is, I'm going to buy this stock because I think they're going to announce, good earnings, that, they have this great product and they made a lot of money, the last quarter. So earnings season comes out 4 times a year: first quarter, second quarter, third quarter, and fourth quarter. So right now, this is the prime time to be investing, because earnings is, right around the corner. Some companies are announcing it, and so it's gonna, in the next few days to few weeks, you're gonna start to see a lot of action as far as with companies, stock going parabolic. And that's parabolic, if you don't know, it's like a upward motion, just exploding up. So quick recap: earnings, what I call an earnings winner, is a stock that announced good earnings and that the stock is moving. So the range of the stock. So a range is, how far is the stock trading. The range for this right here would be $5.04 to $23.88. So that's the range of it. So in one day, I want to see some type of range. And also, I would like to see volume. So you definitely want to see volume with it. Because if you compare, well, let me just dive into RADA. RADA announced earnings on December 19th. And the thing about earnings is, well, if it's good earnings, the stock could move for days. So it won't just be like a one-day move thing. The stock would move for several days. So with earnings, what I tend to want to do is just get just a slice of the move. I'm not trying to be in at $11 and trying to catch the top at $23.88. That's not what I'm trying to do. I'm trying to get maybe 50 cents a share to maybe $1 a share. just a slice of the move, because in the long run, you're going to start capitalizing. You're going to start to see more patterns, like how the stock evolved. You're going to pretty much identify what the stock is doing, because each stock, they do have their own personality, because the stock market comprised of a lot of people, different emotions, etc., etc. So that's why some stocks have their own personality. So this RADA announced good earnings, and this is the earnings on the bottom right here. You see, just popped up. Earnings, the EST, that's the estimate. The estimate, they thought that the analysts thought that the earnings was going to be 0.054. So actually, it was actually 54 cents. So that was really good earnings. So of course, and as you notice, the little blue box on the bottom right here, this is considered volume. Prior to this, the volume on this stock, it was really doing nothing. And as you could see here, on this day, it announced good earnings again back on this day, and the stock exploded. And look, upward motion after earnings. And and this one, when it announced earnings, it was on 6/27 of last year. It announced good earnings on the 26th. They go the estimate, and this is what it actually did. Next day, exploded. It went from $6.99 all the way to $9, all in one day. In the next few days, it just started slowly grinding up. And afterwards, the earnings, the news itself starts to fade. So the stock tend to fade as well. More recently, announced good earnings here. It went, because the day before it was trading at, it closed at $8.32. The next day when it announced earnings, so many people was buying it before the market opened, it actually caused the stock to gap up. So by the time it opened at a higher price. So it actually opened at $10.99, because there was a big demand of the stock. So during the time that the stock market was closed, people were putting in their orders to buy the stock. So when they were buying it, by the time the market opened, it was already valued at a higher price. And that's due to earnings. So you had 1, 2, 3, 4, 5, 6 days. So each one of these bars represent a day. So 6 days of this stock trending up, all because of earnings. So earnings to me is by far the easiest play that I think any beginner should study. You see what stocks that are in the market, that announce good earnings. And normally the stocks that announce good earnings, they're normally on the top the percentage gains. So just because you missed it for that one day, you always have the second day, you have the third day, you have the fourth day to be able to still get into the stock. So another example is FRAN. FRAN this was on 9/10/2019. It announced good earnings. And again, prior to this day, look at the volume. You see this big blue bar? That's the volume. It did 21 million. And the reason why I know it's 21 million is it tells me right here, see volume. Once I hover over it, so 21 million in volume. Before that, it really wasn't doing, it was only trading 103,000 shares, 115. So not really that much. Out of nowhere, it announced good earnings. And next thing you know, this thing went from the day before, it closed at $5.16. So the demand was so strong the next day when it announced earnings, before the market opened, it opened at $9.94. Then it got all the way a high of $21.95, and now it is, coming down. But this whole up move that you have when it comes to earnings. So I would urge you, I'm not even gonna, because there's so many other strategies, but I think as a beginner, you should probably just stick to just one strategy and just learn this inside out, inside out. Don't play any other type of strategy. When a stock announces good earnings, learn it inside out. And by you learning it inside out, because not only the other factor of it, anytime a company announces good earnings, which just simply mean the company itself, they're making money. So the lifeblood of a company is profits, is revenue. So if a company is making profits and revenue, the likelihood of the company surviving is greater versus a company that's not making money, because you don't want to buy into a company that could maybe go out of business. So stick to earnings. That's video number 3. If you have any questions, leave a comment below. Um, but yeah, this is Vlad signing off. Hope you guys enjoy the rest of your day. Peace.